Hi, everyone. Just give it a few seconds here to let everybody trickle in, and we'll get started. All right. Hello, everybody, and thank you for joining us for today's webinar brought to you by Global Ag Risk Solutions. My name is Michelle Allison, and I'm the group publisher for Top Crop Manager. I'm joined today by Mark Gottselig, National Sales Leader at Global Ag Risk Solutions. And a big thank you to Global Ag Risk Solutions for sponsoring our session today. During today's webinar, Mark will discuss production cost insurance, touching on such topics as 2022 opportunities, what is PCI and how it helps with decision making, and how the combination of agri-stability and PI, production cost insurance will work together. He'll also touch on how it will cover forward marketing decisions and then putting all of it together. This webinar is being recorded and will be made available to all attendees and registrants approximately 24 hours after the live broadcast. The session will run for approximately 45 to 60 minutes, and following Mark's presentation, we'll open the floor for questions. If you have any questions throughout the presentation, please type them into the Q&A tab found on the bottom of your computer screen. And without further ado, over to you, Mark.
Thank you, and I appreciate, Michelle, this opportunity to be in front of the audience that we have right now to talk about this upcoming year and mainly how we know at Global Ag Risk Solutions with the products that we have and the options can help with the opportunities and uncertainties that are forward. And really, that title can be any year, right? At this time, there's always going to be those opportunities out there that we want to capture as farmers, and there's always lots of risk, and with risk comes those uncertainties, and especially after 2021 and a good part of the grain belt and on the prairies, there are uncertainties out there. So we're going to talk about that as well. So thank you, appreciate, and I'm hoping that I can answer most of the questions out there within this presentation. I know that when we do these, there's always lots of things that are on farmers' mind, whether you're hearing a presentation like this from our company for the first time, or have tuned in, and you might have been at a local town hall in the last 12 years that we've been around as a company, or been on a webinar before. So I think that both parties will learn from this, and we'll kind of move forward here. So this is really about our company, but it's more about the conversations that I've been having, and our regional sales managers and our advisors have been having with farms over the past 3 or 4 months, beginning early November at the Agri-Trade trade show in Red Deer. We were deep in conversation with a lot of people from this past year, and some of the hardships they went through, some of the risks that they're really most concerned about going forward. So this is much about that conversation as it is what is PCI, or production cost insurance. So we'll get through it. So just to reintroduce myself, my name is Mark Gottselig, a National Sales Leader for Global Ag Risk Solutions. I've had the honor of working in this company for the past, I'm going into my 10th sales cycle here this year, and 10th year of helping farms not only with the risks that they're facing, the stresses that involve, but obviously, as you will see, how we can help farms really understand and being able to make those key decision-making opportunities a lot less stressful as we go through the entire year because of how we insure. I've always, whenever I tune into a webinar like this, I'm always curious about where that person is from. And so I'm a farm kid from we farm just 10 miles southwest of Findlater, Saskatchewan, which is about 35 miles north of Moose Jaw. Grew up on a mixed operation. My dad and my uncle farmed together. Since have retired. Last crop was put in 2012, so it's been a number of years since they've retired. Mixed operation, and come from a family of 9 brothers and sisters, and my uncle had 6 kids, so there were 16 kids on the farm, and I was the oldest boy of that clan, and grew up just with all the good things that farming will teach a person. And in '88, when I graduated from high school, my dad pretty much kicked my butt off the farm and said, go to university, get a degree, because at the time, still lots of kids couldn't really afford to help me out and get me going. So I played university basketball, got my degree, and have been, trying to keep my toes in the dirt, so to speak, ever since. And so in 2012 was my first year with Global Ag Risk Solutions, and at the time we were still a very small startup company, and have very proudly grown to this past year, ensuring a little over 3.1 million acres in the 3 prairie provinces. And so that's a little bit about myself. I have huge passion for ag, and especially for farmers, and trying to help them through a lot of the stresses that have happened every single year, and especially that cost of production number that is first and foremost the risk. This year, we're seeing a lot of, on average, not an average farm being 5,000 acres, but that 5,000 acre farm tickling, up to $2 million in total cost of production this year. And that's a stress in itself. And we want to make sure that we can help in a lot of those stresses, as well as more, which you'll see upcoming here. So the presentation is called Opportunities and Uncertainties. And I just want to list, and again, this is just from our conversations that we've had with farmers over the past little bit. Every year there's agronomic opportunities, but this year is a little bit different. There's in the crop planning and trying to figure out those best genetics and best chemistry to use with your crop plan, I think is being focused on a lot more this year than ever, because two of the a couple of things that are out of our control as farmers are working towards for us this year, and that is marketing and the markets and the fluctuation that normally happens. Things keep getting just a little bit better, it seems like, for the majority of the crops out there. And whether it be the turmoil that Ukraine and Russia are creating right now, and some of the influxes of how that is involved in the market, to canola being strong, to oats and durum, and a lot of different things being really strong. Many farmers are having a hard look and seeing of what that opportunity could be. Is there any possible thing that I could do that's in my control with crop plan, with my agronomy, that is going to produce the best crop year yield wise ever, because it's one of the best, if not the best, overall market yield or market year ever. Combination of those two obviously is where we're always trying to hit. So lots of things there, and we're going to talk about how we can help with that. Already talked about those 2022 fall crop prices. Just talked to one of our advisors. It's I guess we're Tuesday now, so last week, locking in $20 November canola. One of his farms were locking in $20 November canola, and to say that, and if you kind of rewind to last year at this time, when that $13 or $14 was like, whew, let's go for it, to say 20 now is pretty exciting. And that's just canola, and of course we've talked about or I've mentioned everything else that you guys already know. So these are the things that farmers already know, that in most areas, not all, but most areas are going to have a good start. Yes, the subsoil moisture may not be able to be measured until that snow starts melting, and hopefully it's a slow melt, not a fast melt, and for it to just fill up dugouts and rivers, but actually to leach into the soil as best it can. But we had some good fall moisture in a lot of different areas. Some areas not so much, that are not looking to have a great start right now. And that's why the question mark and exclamation mark. It all depends on who you're talking to and where they're from, as to that optimistic, at least seeding is going to be good, or it's still pretty damn dry. We have a little snow cover, but still pretty damn dry. So it could be an opportunity, but also it could be an uncertainty as well. And from all that, farms talking about this right now is once in a generation in my farming career, and maybe a couple generations, that could be our best revenue year ever on the farm if everything all comes together. Some farms saying, going to be creating a lot of generational wealth, the opportunity and potential to create a lot of generational wealth right now this year. And I want to try everything I can possible so that we can hit out of the park this year. So we're going to talk about how our program can help with those opportunities as much as the uncertainties. And the forefront of it is that cost of production. Many farms did buy the nutrients and fertilizer before it started to really climb, but many didn't, and it's still still climbing, and we still having some issues when it comes to the availability of fertilizer, as well as some crop protection products as well. But those costs of production is a massive uncertainty and a massive risk this year. And which is the reason why our insurance period is so important, whether it's crop insurance, global ag risk, agri-stability, the hail insurance products out there, all are important to cover off that major risk this year. We're going to talk about how we can help with that. There is still a looming drought out there. Many aren't thinking about it. If you have 2 or 3 feet of snow in the backyard right now, and it's still coming. But not just the looming drought, just the recent memory of last year in mid-July when it's been 35 plus degrees for already 2 or 3 weeks in a really tender part when it comes to flowering in most crops. The drought was one thing, but that intensive heat was another one, and so we want to talk about that and how we can also help with that. Market, the forward contracting indecisions right now is an uncertainty, and that is because of last year. Saw a few articles in Western Producer and some other places as well, where a big majority of farms that locked in crop last year had to pay contract penalties because of shortage of yield or quality issues or whatever it was. And so, knowing fresh in our mind what happened last year, and you've seen some of these opportunities, there's a lot of indecision. Well, do I pull that trigger and lock a portion of my target yield in or not? And because of what happened last year. So there's that indecision as well. These are all things that we're talking to farmers about, or farmers are talking to us about. And the final one is the depleted working capital position and the depleted working capital ratio that a lot of farms have went through this past year. And at the crop production show in Saskatoon, had really in-depth and emotional conversations with a few farms saying, we're okay going into 2022, but our working capital position took a big hit in 2021. I did have crop insurance, and it did, pay me like it should, but I didn't realize that I'm not quite protected how I thought I was protected. And my working capital took a little bit of hit, and I don't want that to happen again. So that's the conversation that farmers are coming to us about. Heard of us before, not really knowing really what we do, and some really intense conversations with how we can help through a few of these things. And so even if you didn't, you ended up having a good year, and that ratio wasn't affected. We work with a lot of farms to work with them to keep that, what they've built that ratio to be, what they built their farm to be, to keep that strong and resilient because of how we insure. And so that's what we're excited about as well, is not just helping farms, obviously through the tough times, but when you've worked up to where you want to be at for a farm, how can we keep that strong and there be no chance of you going backwards, but to keep that resilience happening. So opportunities and uncertainties, we're going to talk, and you'll as we go through this presentation, you'll start putting 2 and 2 together, how we can help out with all of them. This is the mindset that I know farmers have, and trying to have every single year, and that's really that optimistic mindset. If you don't have that, then you're pulling back. Then you're kind of worried about what could be because of last year. And this is the mindset that we are very proud to put into all of our clients that have a global ag risk solutions product, is that because of how we insure, not just that, but actually that making that complete insurance package with the suite of products that are out there, including crop insurance, which has been around for generations and has worked very well for a lot of farms. How can they work together? And that's what we really get into. And how can agri-stability also be intertwined in that government program that is very inexpensive, and we'll go through the reasons why we think agri-stability is an important part to a farm going forward as well. But it's about putting together that full and helping the farm really understand their best worst case scenario and having that number in the back of their heads so that they can have this attitude about planning and getting out there and having the best ever year that they have here. Michelle, do we want to stop? And I saw that there was a Q&A there, a question, or do we want to wait till the end?
Sure, yeah, we can run through it.
Sure.
So it asks, with improvements to provincial crop insurance coverage levels, about 500 to 600 an acre, at less than half the price of GARS to farmers, what is GARS' plan to become more competitive on pricing now that coverage levels are similar?
That's a fabulous question. And like, so it's all about obviously that forward-looking potential that the farmers have. And in the past years, last year and the year before, really 2 years ago, we started to incorporate that forward-looking projections into our underwriting and into our quotes, and our delivery of quotes a lot more than 3, 4, 5, 12 years ago, where we were looking more at history and not so much at forward-looking projections. So it's just it there. I mean, some of these strong prices that are Manitoba has already announced, Saskatchewan today, Alberta probably in a couple of weeks. How are we going to stay competitive with that? We're seeing the same numbers, and a lot of those prices are in our underwriting as well. And because that risk overall risk is up, but the potential for the farm is also up. So it actually, at some of these levels of insurance, actually is becoming a lot more inexpensive with global ag risk because of that risk structure. We are, I feel, going to be very competitive with the provincial crop insurance programs in many areas this year. There's always going to be those areas and those crops, those one crop situations where canola might be at $550, $600 an acre of coverage. Remember, it's just yield coverage, right? It's not your revenue coverage, it's just yield coverage still, but that's the potential that they have if they have a complete wipeout, where our overall farm protection might be $450 or $500, but that's overall. And we'll get into how our program is a lot different than provincial crop insurance, and how, having a program like this gets you really to pick and choose and really identify what is the best provincial crop insurance I should take over and above the global ag risk product. So big answer to say we understand that, and I believe that our quotes are gonna be quite competitive out there. Putting ourselves, myself in your shoes, when it comes to this presentation, we're going to go through some of the main frequently asked questions, and I'm hoping I can get through all of these in the next 30 minutes or so. First of all, who and what we are, how can it help with what lies ahead for 2022 and beyond, who we're insured by, because that's really important to understand, especially this past year when all crop insurance companies, private, public, hail insurance too, had just massive loss ratios. So it's really important to understand who are they insured by, who are they backed by, is my premium money safe, just in case something like last year happened. Talk about that, and then finally, if we can get to it, a little bit about our claims and how when they get paid. Those are questions that we want to answer, but I also have some questions for you, and these are rhetorical in nature, but if you want to jot down just some of your thoughts as we go through these. And if you can kind of reflect from 2021, late February 2021, how are you feeling at this time for the potential of 2022? And feeling of excitement and feeling of anxiety, anticipation that it could be really good, some stresses with costs of production. So how are you overall feeling this year with that potential, and what are you doing about it right now? What are you most worried about? And what are you most excited about? So within that feeling, that first question, breaking it down, your biggest stresses and what you're most excited about going forward. What is the one factor that stresses you about making key decisions? So that key decision, if you feel that the $20 canola is really good, you don't want to lock it all in because who knows where it's going to go to, but you feeling that you want to lock maybe 20, 25% of your target yield. What stresses you out about something like that, or other decisions that you have on the farm going through the year? And for some farms out there that really unfortunately took a little bit of a hit and major drought and really didn't grow a lot and weren't insured as you probably wanted to be. If you have the same situation that happens from 2021 into 2022, knock on wood, it's not going to happen, and you didn't make any changes to the strategy of insurance, how would that affect your farm? So that's into that working capital ratio and really the resiliency of your farm. So some questions I have for you, and we're going to dive right into production cost insurance. And so what is PCI? Well, PCI stands for production cost insurance. So our name as a company is Global Ag Risk Solutions, but this is our product. And we also have a subsidiary product in the parametrics, and that's the canola heat cover that we're not going to get into today, but we might be able to enlighten you a little bit later on as we get closer to spring on that. So PCI is our main product, and it is a full farm revenue protection that fluctuates, all depends on your cost of production. We'll get into what that means. So if you know crop insurance is obviously that yield, crop to crop yield protection. We are that full farm on the crop side because we don't insure animals. Full farm on the crop side, revenue protection. So what we are doing is guaranteeing a floor revenue to the farm based on your history, based on your forward-looking projections. And so when we set an insurance floor to you, that risk that you take on does not change. Your own risk that you take on does not change from when you purchase the program till right to the end of the year and after harvest. So we're full farm, not crop to crop, and we're revenue, not yield. So what we do is it's really about trying to find if there's a value to our program within your farm, according to your present risks, but not just that, according to what your goals are and where you are actually in your farming career. All that work is done with our advisors at kitchen tables with the farmers. So if there's value and you purchase it at that right level and option, and really understand how it can be used beyond just the insurance itself, this product will unlock or encourage and maintain for those farmers who are already, fully in with their agronomy, fully in with their market potential, have the coaches to back up all their decisions. But it really helps with all those major potential of the farm while greatly reducing the stresses, not just in the overall picture of the farm and the risk of the financial picture, but those key decision-making times throughout the year in your agronomy, in your marketing, in other areas of buying land, of renewing machinery. All those key decisions that you make throughout the year are made with a lot less stress, we're finding, and after we're hearing testimonials every single year. It's what brings me my passion, talking to farms and how they're actually using this throughout the year and not just in the crop season. And so ultimately, we say it's a risk transfer product. Transfer the majority of your, and for some farms this year, actually transferring the total cost of production over to Global Ag. And for other farms, a good percentage of your total cost production to Global Ag, creating that floor revenue and then moving forward to there. And no no better year when it comes to the stress level of this program happened, like so far in my history with the company as of last year. Lots of stresses, obviously, in that first, second, third week of July. Our advisors, making sure that we're following up with farmers, finding out how people are feeling, and reassuring them that this package that they put together, not just with production cost insurance, but other things that we've included in there as well. And our advice is protecting the farm, and some great stories about some of these farms who, in the worst drought-stricken areas this past year, are actually growing their farm. There are opportunity that is coming up due to, unfortunately, some farms not being able to pull through and having to restructure our purchasing land because of how well they were insured and moving forward. So those are the things that we like to hear. Not that farms are not very well insured and have to restructure, but having opportunities here to make sure that your farm can move forward on bad years and on good years. So this is our proven process, and I'm not going to get into this. This is what we'll take you through, or the advisors will take you through. And it's not just applying for a quote, delivering a quote, and hey, are you interested? There's actually some things that we want to talk about first, and then get into the actual professional risk analysis and have a proposal for you so you can kind of see the big picture of everything, and then to go through this process as we go. So advisors will take you through this. So how our program works, and this is going to really connect the dots as to opportunities and uncertainties with it. Again, we're a full farm coverage, and let's just say that you are, and I know it's a big farm, but let's just say you're a 10,000 acre farm, but put whatever acres you are in there, and you can figure out your own math if you have a calculator right there with this example. So let's just say, and I believe that on average, it's going to be over and above $150, but in your plan, in your agronomy plan with your genetics and your chemistry, you're figuring out that for my farm, I'll be spending about $150 an acre of seed, fertilizer, and chemical. So when you're looking at that, and then over and above that, with your quote, Global Ag Risk can offer you some different levels over and above that to take care of your other costs of production as well. So on your quote, let's just say you're taking a look at that $150 level to cover off a good portion of your other costs of production is at the good price point for premium, and it fits for my farm. So that means that as a full farm, the plan and what you're buying it for is going to cover you for $300 an acre of coverage. And again, this is just an example. Our coverages will fluctuate as to what you're actually qualified to pick from the quote, but let's just say this is just for the purpose of explaining this. So that means this 10,000 acre farm has $3 million floor when they purchase, because that's what they plan for. So that's set. You know that you can't go below that floor no matter what happens to your farm, drought, markets, combination of the two. You can't go below that floor that's set. So our program covers, in the end, your actual costs of all seed, fertilizer, and chemical, plus that margin over and above that. So let's just say you bought it knowing this, but you actually spent a little bit more. And in the conversations this year with the residual nutrients that are still within the soil, from the soil test because of the drought and the plant's not using it up. Some farms are not being as aggressive this year than they normally are because they have the residue, but they are still planning, if it starts raining, to top dress to really push that potential if the conditions are right. So let's just say that is you, and your costs go up another $20 an acre because of that extra fertilizer hit. And it could be anything. It could be a combination of that, fungicides, taking care of grasshoppers, whatever it is, seed, fert, and chem, we're covering dollar for dollar. So in this example, your cost went up to $170 by the end of the year. With that extra margin coverage, you're now $20 more an acre of coverage, or $3.2 million floor, and we're not charging you any more premium because you've already purchased, you've already locked in, And the power of the program is just that. And especially this year, when farms are talking to us about the potential, and I want to do everything possible that I can. Well, this is exactly what we're talking about. Not just using it for insurance, but using it for profitability and creating that resilience year after year for the farm. So we can do this, not charge any more premium, because you actually become a lesser of a risk. The better, and the more decisions that you make to really hit that target yield or beyond, the less of a risk you become to the insurer. And so that's why there's no increase in premium, because you actually become a better risk. And we found this through math and through our data that we've collected over the past 12 years of insurance. Cost of production are huge, obviously, in farm, and realizing that you can learn a lot about history looking back and the decisions that you make going forward. So we will do this as a service. We'll take a look at your cost of production. We'll mine these out of financial statements that we ask you for to quote your farm. We don't care about your current wealth or anything else except for cost of production. This is what we want to do. We do this because we want to give the best possible advice that we can give. So we will provide something like this. This is an hour in itself going through this chart. But really what we try to focus in on is, because we're covering in the inputs dollar for dollar seed, fertilizer, and chemical, we want to find out historically, and then what your cash costs are going forward with your other costs of production. So we can give the best advice for that extra margin coverage over and above your seed, fertilizer, and chemical. So if you look at this fixed costs here, all your other costs are in labor, power, machinery, land, building, and finance, and the total of those costs is the other risk besides your seed, fertilizer, and chemical for your total cost of production. So that is, we do this for advice, we do this for knowledge, and it is really, a lot of farms, well, most farms really appreciate this chart and kind of looking back at their farm. Is there another question there, Michelle?
No, I think we're okay right now, Mark.
Okay. So let's talk about how this is used in the life of a farm, from planting right till harvest. So let's just say that your farm has those extra costs above seed, fertilizer, and chemical of $205 an acre. So that's your land, your machinery, your arm's length labor if you have that, your fuel, which of course is going up too. And some are saying that diesel is going to be above gas shortly. Let's just say all those other costs to your farm are about $205 an acre. So in our insurance, and this is, I'm going to explain the full coverage option here, and we have different options that farms can have a look at as well. But let's just say you take a look at your quote, and that $200 extra margin coverage above seed, fert, and chem is very attractive. Premium is good, and you know that you can take on a little risk to your farm. And in this case, you're taking on $5 an acre of risk because the rest of it is covered by this insurance product. So that's locked in. You've paid your premium in the planting stage, and now you're ready to jump in the tractor and start seeding. Well, from here on, every dollar that you spend and use for seed, fertilizer, and chemical will start increasing, and your insurance is starting to build based on your agronomy. So your risks go up, but now this product will follow dollar for dollar every step of the way, so that you are maintaining that $5 an acre of risk for your farm, no matter what you do from here on in. So when you're looking at agronomy and you're looking at genetics and the chemistry that you use, crop protection, all those different things, fertilizers, and you're in the herbicide in crop and you want a top dress and your costs go up, well, so does your coverage level as well. And into the fungicide season, hopefully it's the exact opposite of last year. Our farms are using fungicides this year because the crop is so healthy, because there's moisture around. Those costs are covered as well into any crops that have to be desiccated, so that by harvest, when you're full in with your agronomy, knowing you had that $200 margin coverage, that protects and covers a lot of your fixed costs, plus the addition of your seed fertilizer and chemical. The floor revenue and the guaranteed worst case scenario for this farm does not change from when you purchase the program right to the end. Okay, so for this year, some farmers, we're going to be able to cover off full, if not over and above that, for a very good price. That means that you're in a win situation no matter what happens. But the competitiveness of this is that prices for some of these levels in some areas are very competitive. And this is a year to make sure, if you can remember last year, to lock in and to make sure all your risks are covered. And that little extra that you might be using on an insurance is going to be a drop in the bucket compared to your potential. But we want farms to be covered off so that their only mindset is potential and not what happens if things that are out of my control happen to me. I know that I'm going to be okay because I'm just looking to go for it no matter what. And so this is the power of this insurance, is that yourself, your partners, your family, your ag lender, doesn't matter who, knows that your floor revenue is set. And then if you want to add anything on top of this, like if you have a really good canola coverage for very cheap, let's look at locking in some canola coverage on a yield basis too from your provincial crop insurance program. Knowing that this is covered, and then all those individual choices that can be made from there. On a good harvest, obviously, no claim. In a poor harvest, where you have a time where you don't get to that potential that you want, and you actually are losing some money, we know that we're covering, and we know that we're bringing you up to that guaranteed floor revenue, no matter what happens. So this is all about, and you're on today to gain that knowledge, and we're such huge advocates of using all of those advisory services out there that you have, because it's tough to know everything on your operation and be that professional at everything that you do. So by gaining knowledge, if you follow this along to the on the bottom bottom left-hand corner of this triangle, understand that knowledge. That's going to give you motivation and hopefully start breaking down some of these uncertainties that you might have because of the knowledge you're gaining today. And so everybody here knows the how to get this out, how to actually knock it out of the park, including my marketing decisions, which I'll talk about in a bit. So you know the how, but then there's always, with that knowledge comes a little bit of anxiety and uncertainty and fear. What happens if it doesn't rain again? What happens if it is that hot again during the summer, added to no rain? So this is what we're feeling and hearing from some farms. I'm going to step back just a little bit, and if something happens, and I'm going to start going for it from there. But they're already thinking, what happens if we want, work with farms to get that really good insurance package together, so that you're not taking no action. You're actually making decisions right now that are key to when you start. And that includes, in a lot of farms, a production cost insurance option. And then the result, the bottom right-hand corner, is going to be the result of best generation in farming, or best year for my generation in farming. And if it doesn't get there, you're insured well enough to keep that farm growing. And so it's that kind of all-in mentality that we want to try to encourage farms, especially every year, but especially on the years and the opportunities that are out there right now. This is our suite of products. Again, we have things that will fit with a lot of farms. I talked about how the full coverage product works, and that's the one on the left-hand side. And that one and our margin coverage as well, those first two are still main programs that farmers really like. And I think 80% or more policies are purchased with those two options. But we also have a lot of other different things that'll help farms if they have strong crop insurance or other things that are back in their farm. Don't want to pay the premiums of those full coverage products. So we have other things that can help you as well, including our ag wrap products, which I'll discuss just very briefly here. This is what advisors will come and talk to you guys about. Not enough time to go through each and every option here. Just know that there's lots of different things, ways that we can help you get to where you want to be with your insurance program. But the agri-stability, with the changes that have happened this past, or 2 years ago now, make it so that it really makes sense to consider a private product like us in combination with agri-stability. Before these changes happened, each program, private insurance affected your agri-stability claim payment if you didn't claim. And now with the changes, that no longer happens. So one of the biggest changes here, and we were very happy to be the lead on this with the federal government in making these changes happen because of what we believe as farmers ourselves and as private insurers that are not subsidized by the taxpayer, that any private insurance proceeds now, so a claim payment, is no longer included in that program year for agri-stability, meaning that any private insurance, Hale, ourselves, our competitor, anybody that is not subsidized, that claim payment does not affect your agri-stability claim payment anymore. They're separated out. It does not include subsidized programs like provincial crop insurance. Still affect that, and we saw that this past year, some farms who were in agri-stability but had really large claims in crop insurance that had actually totally erased their agri-stability coverage because of how one affects the other. So that is, but some big wins for the farmers as well that we were happy to fight for is that the premiums from private insurance still and remain an eligible expense for agri-stability. So it's part of agri-stability coverage is those premium expenses that you have from private insurance. And probably in my mind, the biggest win for farms is that in the agri-stability world, is that any of those claim payments that were happening from private insurers are going to be added back in to that farm's history to keep that reference margin that you have strong for future years. So that is a massive win because in one instance, they're taking it out and it's not being affected for that program year, but then they're adding it back in to keep that margin really strong in the calculation for your reference margin years forward. So what that means is that, I could tell, lots of stories that happened this year. Many farms that had global ag risk products and agri-stability actually ended up in the black, actually made money this year, even though they had the worst year period on their farm. And they put themselves in a position just to keep on moving forward. And that's what really excites us about the combination of these two right now is the fact that if you have a medium to severe disaster on your farm, that you're actually making money, you're claiming equally on both, that one is not affecting the other. So with the quote this year, if any of you have been quoted in the past, and I'm talking about, in the past, before we started looking at forward-looking projections, we do a lot more now than just look at history and quote based on history. So your coverage now is just not looking back to 5 years, but actually will go up to 10 years of history. And the reason for that in some areas that the last 5 years was so rocky that just by going off that, we're going to create situations where the coverage was not going to be relevant to you. It was going to be way too expensive and not great coverage. And so now we're going back 10 years to try to smooth out that history that'll make the quotes a lot better. So we're looking at that. We're actually trending that as well to today's economics. So some of you farmers might think, well, what the hell is 10 years ago? What does that have to do with what's happening right now? Well, we're trying to trend all those numbers so that it is within today's economics. And then we're also looking at forward-looking projections as well, right? What are you looking? What's your targets? And the combination of those is what we're doing now to create those coverage levels and the pricing. We also look at some different zones. Obviously, insuring a farm in western Saskatchewan is a little bit different because of the history versus northeast Saskatchewan. So we're also looking at that, and then the volatility that you were experienced over the years that you had in those 10 years as well. We also look at. So all of this together is, and it's very detailed, and we're bringing in more and more data every year to make sure that we are customizing that individual coverage for the farm as best we can, according to history, according to forward-looking margins, and then producing a quote proposal that is not just talking about the numbers, but really getting down to the farm. And if this actually can bring value to the farm in any single year that you're quoted. If you don't feel, and the advisor doesn't feel that it's going to bring any more value over and above how you're currently insured, then we're going to say, thanks for getting quoted. We'll see you again next year. That happens a lot less every single year that we're in business because of how our quotes are, how we're underwriting better in every single year. So we're going to talk about those risks and opportunities for your farm. We're going to show that financial summary and go over it. We're going to get into what the advisor feels according to what they know about their farm and from the conversations that they had with the farmer, what those top 3 best offerings might be, coverage level and options for that farm. And right there, for many farms, that's enough to kind of see how it can help their farm. Other farms want to go into a much deeper analysis, which we can also use with the software that we have. And then for some farms who want to look at benchmarking, we can also do that. So you can see that this is a much broader protection than just yield coverage only. We're covering all factors on farm, including forward marketing risk, which is a big deal right now, and farms having uncertainty as to what to do. Do I lock in? Do I not? I paid all this money in contract penalties last year. I don't want that to happen this year, so I'm just going to wait it out, even though I should maybe lock a little bit in. So this is actually a graph that I pulled on canola, and the prices that, and the little future projection that this company is looking at. Don't want you to focus in on that. I want you to focus in on what I have to say about it. And so we cover in our claim, if you have a contract penalty because you have a shortage of inventory on the farm, that you can't actually fulfill that contract. So if you have a shortage of inventory, that you cannot fulfill that contract, and you have a penalty, if you're in a claim, that penalty is also added to that claim, and it's covered by global ag risk. Okay, which happened a lot last year with our customers, and unfortunately with a lot of farms that maybe didn't know about us or chose not to take us last year. They experienced some of these really high contract penalties. We're covering those penalties if you have a shortage of inventory of that crop on the farm to fill that contract. All right, so this is, again, another way that we can help with uncertainties and help with those opportunities is because of how we cover. And this past year, our reinsurance partners really kicked in. We had our biggest claim year on history, as did crop insurance, as did all 3 provinces, have massive loss ratios. We are very secure. We have over a dozen reinsurers who support the main paper that we have. And I wanted to show this because even after a year like last year, we're strong because of the belief that our reinsurers have in us and the business that we run. We're out there quoting already 2 or 3 weeks ago because we know that we're going to have a product, and we're very secure as a company. The claims process very quickly. I know we're at 10:02, and advisors can go into more detail, or there might be some questions that we might have that we can answer after about the claims process. But unlike up to 3 years ago, our claims process has also improved where the farmer is in a lot more in control as to when they want to start and when they get paid. And many of our claims this year have been paid before Christmas, where in history, before we make this massive improvement to our claims process, most claims were paid actually into February, March, April, sometimes into May, into the next summer, because of our process. So wanted to tell everybody and to ag lenders, if they're on this call as well, that if the farmer chooses, we can get that claim paid before Christmas in many instances. It's just a bit about working capital, and I covered this a little bit already. Some of the stats that we have here. So what we knew intuitively when we created this program, we can now prove with data. And that is that this program is helping many farms take those risks and make those key decisions making for profitability and resilience. And farms' gross margins, or their revenue, is going up every single year because of us having them having a program like this. For others that are already doing everything, they now have a program that follows exactly their aggressive nature. And because of how we insure, we also have the data because we quote, obviously everybody that wants a quote, we quote. Not everybody takes our product for different reasons, but we have the data on both, and we can comfortably say those that have been in our program are actually making more money than those who are not, because of how we, in most years, create that mindset that they're going to be more profitable. And those years that Mother Nature comes in and kicks them, in the shins, that we're also saving that farm for going backwards as well. So it's actually a proven concept that we have through math. And the last slide is really about the heart of our company, and that is the local advisors that we have across Western Canada, or the Prairie provinces. We have many people who have a huge passion, coming from different backgrounds. Most of them have some farming background within them, but we have insurance brokers that are our advisors. Most are the bottom three, so independent ag consultants that might be doing some other consulting in some different parts of the farm. We have a lot of farmers themselves who are advisors that have such a strong belief in what we do, that they're farming and they're doing this, or they're retired and they want to make sure that that farmers and the communities are strong because of our program like this, and really educating farms in what we do. And then we have those that are now doing this as a full-time career, and because of what they're doing, helping farmers, the strong retention that we have year after year, it's actually viable to doing this as a full-time gig now. All have a huge passion for ag. Most who are actually living in the communities that they're advising, their kids are playing hockey with those clients that their kids are in hockey, or taking them to dance. They're ingrained in their communities, and all have overwhelmingly said the why for doing this is because they want to keep their communities strong. And they know that this could be a big part of continuing to make that happen in bad years and in good years. So from here, we always encourage to get a quote. Quotes don't cost a cent, and why not take a look at the numbers to see if it actually can bring value to the farm. We think that we are competitive again this year, although we are two different programs. Sometimes, when I say we're competitive, it's like comparing apples and oranges. They're two different programs, but in essence, we still know that we have to be competitive because the premium dollar is hard to depart with for most farms, and they want to make sure they're making the right decisions based on their own risks. But let's find an advisor, let's get a quote, and see if we can bring value to the farm. So lots of information. I'm hoping I hit all of those key points. I know I didn't go over the claims process as fine as I want to, but I want to leave time here at the end for Q&A here. But that's what we're all about.
Perfect. Thank you very much, Mark, for your presentation. You definitely covered a lot of great information today. So to our audience, if you have any questions for Mark, please type them into the Q&A tab now, and we'll just give it a few seconds here and see if anything comes in.
And please, there's no dumb questions. This is still new to a lot of people out there, and for some that might think they know what we're all about, ask those necessary questions to maybe uncover some more knowledge that you might not have.
All right, Mark, it looks like you've covered everything. There's no questions coming in quite yet.
Yeah, if there's no questions and I have 5 minutes, I will dive into the claims process a little bit more if I have time to do that.
Sure, let's cover that quickly. We've still got most of the attendees here, so let's dive into the claims process.
Good, okay. So before we made this big improvement in our claims process, we needed financial statements from that claim year in order to finalize the claim. We could pay a little bit of money up front for Christmas, but we couldn't finalize things till after the financial statements were sent to the farms. So that delayed, obviously, the process. And we heard loud and clear from farms, we need money before that, especially if we're in a pickle and we need to make payments and all the commitments that we have after harvest. We need money before. So now farmers can still remain in that old process where they want their financial statements done before they get paid if they're in a good cash positions going forward and that claim payment isn't really necessary at the time. Still can go into that, but most farms now have elected to go through our new process and our improved process. So we don't need financial statements anymore to finalize claims, but we need good books. So what I mean by that is for farms to actively and continually update their ag expert or their QuickBooks and to have a really strong general ledger that shows their activity that they have, because we need to know cost of production, the seed, fertilizer, and chemical especially, and we need to be able to track what you have for those costs. So farms now can choose an end of a month, and this year, because we had a really early harvest and really farms that needed to be paid a lot sooner than later, we started in September 30th, where any unpriced inventory on September 30th, so any uncontracted stuff or any stuff that wasn't sold, we price that inventory according to your regional prices at that time on that date. Because we need to know not only yield, we need to know price to evaluate the revenue of that crop, because we're not just a yield product, we're a revenue product. So once we have the general ledger, once farms can choose their cutoff date, which is the month end from there forward, so September 30th, October 30th, November 30th, they can choose to lock in the prices on those dates for any unpriced inventory. And then they have 1 month to get in the rest of the paperwork that we need to adjudicate the claim. So it's fully in the farmer's hands to get that paperwork to us so that within that month that we can get everything, all that we need. And there's going to be some back and forth, like any claims situations that happen with any product that you have. There'll be a little back and forth to make sure we get to that right number. But then once all that paperwork is in, then we can pay you the claim. Now this past year, because of the enormity of the claim numbers, the farms that claim in there, normally we get you paid within 7 to 10 business days of you finalizing or signing that proof of loss. This past year, it was within a month because of just the massive amount of claims that we had in our queue this year. But most of the time we're a lot more efficient when it comes to paying. But all that means is that the farmer is in control when they want to lock their crop in for pricing. They're in control to getting us the paperwork that we need within that month, and then they're in control a lot more of when they get paid. So that's our claims process right now, and we do not need financial statements to finalize claims anymore. A lot more happy farmers out there.
Perfect. Yes, for sure. I bet. All right. So if anybody has any last minute questions, please type them in right now.
And if you're if a question pops up a little bit later on too, is there a way that they can get you the question, Michelle, that I can answer, or is it okay if I give out my email address?
Sure. So yeah, you can definitely reach out to Mark, or you can connect with us at webinars@Annex Business Media, and we'll forward it on to Mark. But Mark, do you want to share your email address just in case?
Sure. It's pretty simple. It's Mark with a K. So Mark at agrisksolutions.ca. Mark at agrisksolutions.ca.
Perfect. All right. And I think that's everything for now. I'm not seeing anything else come in here. So I just want to thank everybody for joining us for the past hour and for today's webinar. Thank you again to Mark and Global Ag Risk Solutions for sponsoring today's webinar. And feel free to visit topcropmanager.com/webinars to view all archived and upcoming webinars. We will add this to the website as an archived version, and you can view it at your leisure as well. So thanks again, Mark, and I hope everybody has a great rest of your day.
Yep, stay warm. Thanks, everyone.